good friend. And I don't know if you guys know who Adam Mesh is. He was one of the original people that was on a reality show called Average Joe. And then, Adam, when you did that show, you came in second, right?
Yeah, I was a lovable loser at the end, but when I came back on, I had my own. Yeah.
Yeah, exactly. And now they've got a successful one, The Bachelor and The Bachelorette, which is basically a copy of that show, right?
Just better looking people.
All right, cool. So, and he's also, make sure that you guys ask him about that show, and then also, little known fact, he is one of the first people that came up with the acronym YOLO. A lot of people don't know it, but he's one of the first guys that came up with it. So ask him that story too. So I'm going to turn Adam loose. He's a good friend. He's a really good trader. He's going to talk to you about how he finds his trades, how he enters them, how he exits them, and how he finds his edge in the market. So make sure that you turn off Facebook and Twitter and all that good stuff. Focus on what Adam and his team have to say to you tonight. Adam, both of you guys are set up as organizers, and I've got the recording set, so you're good to go.
Awesome. Thanks, Hubert. So first of all, I'll tell you guys that actually the way I got into this business, the show was on in 2003, and when they had me back, one of the competitions we had was a trading competition sponsored by, I think it was Schwab, and I worked with 20 women teaching them how to trade on a segment, and I was inundated with so many emails that it led to me starting my own newsletter because so many people were asking for help in the market, and I was, at the time, I was a professional day trader who owned a day trading company with like 80 traders. So it was fortuitous that that show led to this career. And now it leads to you and how we find the highest profit, low risk trades every day, which is hosted by myself and Christian Tharp, who I'm going to tell you about in a second. I'm really excited because we do have a great presentation for you. This will be how you get your trader's edge. So again, my name is Adam Mesh. I'm the founder of the Adam Mesh Trading Group, author of Beginner's Guide to the Stock Market. I spent 18 years as an electronic trader. What I'm most proud about is that it's taken years to build up my reputation, and it would take seconds to lose it, but for over a decade, we've maintained a spotless online reputation, just believing in the mantra that the customer is always right and comes first. So that's you, so thank you for being here. Joining me is Christian Tharp, CMT. CMT is a chartered market technician. It's the highest level of technical trading there is. Christian is our chief technical analyst. He's also a good friend and someone I've worked with for over a decade. He's a professional stock market coach. He heads the coaching at the Adam Mesh Trading Group, so he's taught thousands of people how to trade for themselves. Author of 5-Star Trading Academy, editor of Today's Big Stock, analyst for Smart Money Elite, and again, chartered market technician. And as I've worked with Christian throughout the years, I've come to really lean on and depend on his analysis of the market. So much so to the point that I started having him do it first once a week, then twice a week, just to get a read on the overall market. I found it to be so helpful. And I'll go over the agenda, and I'll lead into it right now. So the first thing we're going to do is give you a market breakdown. And this is something that Christian does every Monday and Friday. And if you pay attention to the technicals at all, you're really going to love this. We're going to go over the key sectors to watch, talk about the #1 stocks to avoid, the 3 top stocks on our hot list. We'll show you how we trade, how to get your daily trader's edge, go over some recent activity, how you can take advantage now and do a live Q&A. But most importantly, this is a great insight into who we are, what we do, and how you can benefit from it. So to begin, I'm going to be moving the slides along, but I'd like to introduce Christian to all of you, and he's going to take over and go through what he's seeing in the markets net right now. These slides were literally put together an hour ago, so you'll be able to get them fresh. What's up, Christian?
Not much, not much. Very, very happy to be here, and as you said, I've been working with you, for 10 years now, and I love a good market breakdown. So,
yeah,
love breaking it down. And I tell you, before we get into it, real quick, I don't know if this is everyone or if it's just me, but I am not yet seeing your screen. Now I'm seeing your screen. Okay, there we go.
There we go.
Perfect.
What about now?
All right.
All right, good.
Awesome. Okay, so I just wanted to, I was going to do it by, like you said, I just put these together an hour ago, so I still got it in my mind. But, for everybody on the call, I get asked quite often about, my reads on the market, and, you'll go through, whatever websites and read market breakdowns. And, I get asked a lot about, the accuracy and a lot of times my read of the market, like Adam just said. And really it just comes from, sure, there's being a CMT and there's experience, but also just, I live, breathe, I'm tuned into the markets all day, all night, writing about it, coaching about it, talking about it. So hopefully I'm going to run through some slides here and, maybe enlighten some things. And I think when I was thinking about putting this together and kind of breaking down the market, I thought maybe the best place to start was, at AMTG, we update the markets every single week, every single day. So there's a call I do every day where I'm, breaking it down. And if you were to date back to last year, going in spring and summer, there started to be this stack of problems with the market, starting in March, April, May, kind of going through. You can kind of see May, June here in the left of the chart, where we're kind of running out of gas. We started seeing indices not playing well with others, not keeping up. We started seeing a lot of divergences with momentum, just a lot of problems. And so it allowed us to forecast that something was brewing, which isn't the same as saying, hey, we knew there'd be a 15 or 16 or 20 or 40% sell-off. These were signs consistent with a market breakdown. All right, and without getting too much into it, it's these types of signs and signals and indicators that, allow us to forecast based on probabilities. Right, and so we ended up being right with our August, September sell-off. Got a nice rally. We anticipated that would just be a rally within a larger move lower. We ended up being proven right, as you can see, in January and February here on the S&P. All right. Now, we had been calling one of the levels. You can kind of see right there on my chart, that 1810 level, something we've been talking about since last year. So those of you that might be new to technical analysis, you'd be surprised how amazingly accurate it can be at times. Because you can see in January and February both, it looks like, you would think that we drew the line after the fact. But actually, had you been with AMTG during that period of time, we'd been talking about 1810 as our first level down if we broke below, the August and September lows there. Right? So anyway, so we come down January, we hit that low. We get a little bit of a rally. We were actually able to forecast that rally because you can see that real rough day in January where we hit our 1810 low, but we rallied it back and reversed that. Rallied higher. You can see the lavender-colored trend line. We hit it right on the nose, came back down. And at that time, we actually thought we were going to break to new lows, but we saw a lot of things show up in February that allowed us to call the rally. All right, and you can kind of see us hit the 1810 level again. Actually, in February, the S&P went about 2 points lower than it had in January, just a hair lower. But then we saw another one of those reversals and a real nice follow-through. And I'll never forget that was on a Friday. And it was then that we started talking about, all right, I think we got a pretty big rally coming. There was a couple reasons. If you go to slide number 2, I want everyone to notice this is the Dow that we're going to be looking at. I want you to look at that same August low and then that same January, February low. Okay, you'll notice that January and February low, January's low did not break the August low on the Dow. And the February low did not even break the January low. So if you go back to the S&P slide number 1, everybody look at this again, notice how the S&P did breach its August low and then a hair lower in February, its January low. Okay, this is what we call a positive non-confirmation. It's one of the things of several things. Won't try to cover them all today, but one of the things that'll be pertinent here in a second that led us to believe, okay, we think we got a rally coming. When the S&P and Dow aren't kind of moving in sync, a lot of times that can forecast a move higher or a move low. Difficult to know it at the time. You got to kind of get some distance from it. You can obviously see what happened. And we called for a high in the rally. We thought we'd see a stalling of around 20 and a quarter on the S&P. You can kind of see it where the 200-day moving average sits in March, the light blue line. That's right around 2025. We thought at best we might make it up to where you see that light green line. That is the channel resistance. You can see its corresponding channel support at the bottom. Okay, we're going to come back to that in a second. But we thought at best we'd make it to that resistance. All right. And so once we got there, we went a little higher than we thought. But again, our thesis at the time was that the market would ultimately roll over and go lower and take out those January, February lows. Obviously, you guys can see what happened. That didn't happen. Okay, we end up breaking higher here in April. Okay, now let's move forward to the Dow real quick, and you'll see a similar scenario. Dow, very nice trend line you'll see in lavender. Okay, that's a trend line tested 5 different times. You go back to May, there's your first test. You go back to the end of October, you're going to see a second test. November, a third. Beginning of December, a fourth. And then, of course, in March, a fifth. So 5 different test points. That's the market confirming this is a valid line that it's paying attention to. Of course, you can see the move higher and up and away it went. Now, we were a little concerned about the Dow and the fact that in April, you can see it pulled back below that trend line. And then you see we turned around, and it wasn't until we got that nice little pop to new rally highs that, you know, we started feeling relatively confident that our lower market might be in error there. Now, let's go to the third slide, because we want to look at another version of the S&P that was also important during that period of time. And that's what this channel that you were just looking at is really illustrating for you. Okay, you're going to notice this is the closing price of the S&P, and a lot of times when you look at technical analysis, you want to kind of find ways for the market to tell you something. Unfortunately, it doesn't always. But you'll notice the bottom channel support, the light green line, tested twice. The channel resistance tested 3 times at the top. Okay, so this is the market telling us this is a valid channel, and it's a down channel. And again, in all fairness, coming up to that channel, coming up to that trend line, we just looked at the Dow, our expectation was to hit it, roll over, come back down, and we honestly thought that we'd be taking out the 2016 lows. All right, but the great thing about the work that we do, the analysis that we do, is it's great to know that you know where you expect to be right and expecting to be right, but the better part of where you expect to be right is if you're not, then guess what you know? When you're wrong. All right, so you'll see right there in the middle of April, S&P breaks on the upside of this channel. Okay, so the S&P breaking to the upside of this channel, right there in mid-April, coming out of the green. Okay, the Dow moving back above that trend line. These were our signs that, maybe the market isn't going to lows. Maybe instead the market is telling us, yep, that was about it. We're going to highs. And believe it or not, okay, NASDAQ was working in sync. Let's go to the next slide. NASDAQ, you're going to notice, has a red downtrend line. You can see in the December all the way to present time, tested 3 different times. It's in red. You can also see the 4,900 level, just that horizontal level going from left to right on that chart. And you'll see right there in April, we pop above both of those. Okay, again, at the same time, the S&P and Dow, right? So we're seeing not just one indice, we're seeing a second one and a third. We're seeing the main one, seeing tech. We're seeing everybody break above these levels. And believe it or not, we were doing one of our calls at AMTG on the Tuesday before all these breakouts. These all came on a Wednesday a couple weeks ago. You can fact check that for you if you want. I'm pretty sure. Like I said, I live, breathe, and eat it, so I can tell you it was a Wednesday. If we go to the next slide, all right, we were monitoring the global Dow, and this is like the Dow for the world. Okay, and on the call we're watching this, and I was pointing out, if you look at this down trend line, tested 5 different times. You can see going back to May of last year, again in November, again in March. Again, you can see all these different tests of this line. So the market is validating for us that this is a line that's important. We're going to hit it and go down, hit it and go down, hit it and go down. If we don't go down and we break through, instead that's the market telling us something has changed. So you're going to notice right there where the arrow is, we broke through. That was on a Tuesday. And I remember in one of our calls, one of our that we do, where, big group setting, Adam and I were talking, and I said, judging from this break right here, it sure looks like we might want to start expecting the S&P, Dow, and everybody else to break higher as well. So you can kind of see everybody working together here, and the markets. It's great that we had all these signs telling us we're going lower, but more importantly, they were hinting towards there being a change. You look at the last slide, we saw that same change on the Russell 2000. Okay, some of you may have heard of risk off, right? You talk about junk bonds and that being like a risk on play, but junk bonds have been trending lower and lower and lower. Well, so is the Russell. The Russell is kind of like the risk-on index. Okay, look at the Russell breaking out here. All right. Now, we have to concede that just like the market had given us signs that we were going lower, only to turn around and say, oops, never mind, we're going higher. Of course, we can always concede there's no guarantees. But when you look at each one of these charts, each one of them clearly seems to be sending a signal that as of right now, based on the data in front of us, that we got markets heading to highs. Okay, now S&P and Dow are much closer to those highs, okay, than everybody else. So I could very well see a scenario where S&P and Dow hit new highs, but look how far the Russell's dragging here. You just saw the NASDAQ dragging a little bit. Transports are dragging a lot, right? So this could be just a nice rally, in an overall weak market. But for now, when you look at the market and look what's directly in front of you, you got to like up being the word. So, Adam, I don't know if you have anything to add, but that's where you and I have left it this week. For the last 2 or 3 weeks, we've been calling higher prices. That's what we've been getting, right?
Yeah, I mean, that global Dow chart, this was the big one because literally to his credit, and, I've never heard someone say global Dow more on a call. I said we should have a drinking game where you have to drink every time Christian says global Dow. But look at that move. That was a gigantic move, so it was a really spot-on call on the global Dow right there. I didn't realize that we both obviously can control the screen, so I just have been controlling it. So normally I'm sure Christian would be more active with the mouse. I was trying to keep up, but this is your part. But take us through, Christian, the next couple of slides you put together, because we're going to go over some of the hot sectors, some of the weak sectors, and really I'm just trying to give you guys a taste of Christian and the asset he is in my life, my trading, and our members' trading in terms of what he brings every week to the table and some of the stuff we look at. So one of the things we put together for you, we always run different kinds of scans. The biggest ones we run, I'll show you at the end, is based on institutional flow, money coming in, money coming out. But talk us through what we did over here, Christian.
Sure. Yeah, and as I said, I can't stress enough. I know that sometimes, when I start talking about this, talking about that, talking about this, it can be a little overload. So I'm trying to keep everything pretty straightforward, cut and dry, meat and potatoes only for everybody. But all day long, it's kind of what I do. In the markets, tend to know the sectors, tend to know the markets. And so when Adam said, what sectors have been doing well, it was, from what I had seen. And if you look at individual stocks as well, I think a lot of you may have seen a lot of energy names, the oil companies, the basic materials, right? I mean, that's this rally for the last 2+ months. If all of you are in the market and you're watching the stocks that are taking off, for example, one of the stocks we just got into one of our stock services is SWN. We got in, our first break on that was when it broke above 10, but then when it got above 12, we saw that as a good time to get in. Today, it almost hit 14. The thing's on fire. Well, when you look at the sectors here that are doing the best, that are moving the well, is that a surprise? Look at the last month. I mean, there's hands down, it's basic materials, that are carrying us higher, and that's actually a relatively nice sign for the market. And I don't think that's a surprise. You look at the next slide, take a look at oil. I mean, oil has been rebounding finally, right? So you see in February, right around the same time the market did, oil started to rally as well. And so, basic materials, energy, oil stocks, all these are kind of in the same wheelhouse. So when oil started to find its footing, I don't think that's too, terribly surprising to see basic materials lead the way, which is what we've been seeing. And so, different services, we do different things. But in Adam mentioned institutional money. One of the areas we've been looking the closest at have been the energy stocks. So I just mentioned, for example, one of our trades this past week was SWN. We bought that at 12. It's up at 13.66. I think it closed today, if I remember correctly. PAH, we bought at 10. Another one, it's in diversified chemicals, I believe is what it is. That thing was, we bought it at 10. It's up at 10.60 or 10.70. So by knowing what sectors were doing what, and then kind of paying attention to oil and saying, wow, these are things moving higher, we might want to get in those names. That allows us to take advantage of those, right? Now, we aren't all just, all just energy names. Of course, I like to scan the whole market. So one of the things I wanted to show was the stock that I thought was that I'd stay away from. Because that's a common question we get asked. There's a lot of people that are bears in the market, right? Like the market's not going to new highs, and honestly, you can make a pretty good case for that. So I'm not going to argue when you look at underperformance or this, that, or the other. But I'm a huge fan of can't fight the tape, and the tape tells us higher at this point. But for those bears out there, we get a lot of questions. I want a real weak stock. I want a stock that just, what would you say is one that if I want to ride it lower would be the one? And so I thought, well, these headlines probably aren't surprising anybody, right? I mean, I don't know how many of you eat at Chipotle, but who hasn't heard about the E. coli? And I just ate there this weekend, to be quite honest. They're giving out coupons like nothing.
I was going to say, not only do you want to maybe be short this, but you might not want to go in there anytime soon. Although they are opening up 58 new stores.
Yeah, well, my wife comes to me, and we had a coupon. They had given out a coupon for free burrito, and you didn't have to buy anything. It was a free, or no, you'd have to buy something for the burrito, but the free chips and salsa, you didn't. So I was like, all right, you talked me into it. But I don't think anybody's surprised that Chipotle might be a name that we're not all that thrilled with. when not only you look at these news headlines, but look at the next slide, take a look at the chart. This chart, if you saw this, it doesn't look like something you'd want to own probably, right? It's been down, down, down all the way. And this is one that I've been talking to a lot of my students about. A lot of times it's our options traders too that want to take advantage of, certain moves. But and I said, look, Chipotle is something I'd be watching. I've been talking about this 437 area. You can kind of see it on the chart, right? Look at the end of January. We kind of found support in that 437 area. Look in February, found support in that 437. I wouldn't call it an exact number. If you want to call it 435, 440, just that area. And you'll see twice now in April. All right, now this pattern, this formation, okay, is a bearish formation, a continuation pattern that should lead to a break to the downside. Right, so from what I understand, after hours, this may have very well done that. But I put this together earlier in the morning. So when you see a pattern like this develop, what you want to see is a breakdown of that support. So the news is bad, so the fundamentals are bad. On the supposedly, based on the news cycle. Of course, there's always a bull for a bear, but I think the chart matches those headlines. So when you see Chipotle break lower here, that's something I'd be wanting. I mean, I would want to ride lower, especially if it goes below that January 400 low. That's a psychological point. That's a round hole number. You see this stock break 400, and I'd ride that as far as you can take it. All right. So now that being said, I know a lot of people just heard me, are more bulls and want to be in the long, and of course, our thesis of the overall market was upside. So what we've been doing mostly over the past couple months is long positions. And what I did is I rounded up a couple, on our daily Trader's Edge content. We do some stock picks on there as well, and it's been very easy. If you pay attention to the right things, it's been very easy to get good long positions. So we've done very well. And so I picked 3 of the fan favorites to show everyone and kind of show you what we were thinking and what we saw in some of the calls. So what I did, if you look at the next slide here, I picked 3 of them, and all I did is, those stock ideas that we do, I just simply update them at least once a week and what to expect, what to watch for. And so I just grabbed some of those headlines as we've been updating. And the first one that's done very well for us is Amazon, all right? So you notice in March, okay, I just simply said, hey, look, if this stock holds 550, we're expecting a run to 600. Later in March, we had held 550, but at that point, we developed a new level at 580. I want you to keep these numbers in mind, 550, 600, 580. In the beginning of April, obviously, we'd gotten above 600, so we called for a run to 625. A week later, we said, look, this thing could run to 625, 640. And then, of course, our update this week was the fact that we could be looking at a pullback. Wouldn't want to enter longs unless we broke higher. So let's take a look at Amazon on the chart, okay? And by the way, this is all on the site, too, so you can kind of see that when you get it right, it tends to go very well. And what I wanted to highlight here on Amazon is some of those levels we looked at. All right. So you'll notice in March, very second week of March, that we come down, we hit 550 right on the nose. A couple weeks later, it looked like we were breaking 550 only to turn around and run back up. And we held 550, and that was a great reversal, which is why we stayed bullish on the stock. But you can also see for the first half of March that 580 resistance we hit. So that was the number we were calling for. Held 550, expect to run to 580. We did. If we broke to 580, expect to go to 600. Look at how we hit that 600. We stalled at it for 2 or 3 weeks straight. You saw our call was we break through 600. We expect to go to 625, 640 on the top side. I mean, we couldn't have nailed it any better. 640 right on the nose. You see where we're getting that number, all right? And then now we're pulling back to the same 600 that we broke through, also now giving us confirming evidence of a trend line. So unless this stock breaks 600 and that trend line, we like this to keep going higher. It's been doing well for us. It's ran a total of 90 points since our 550, since we first started monitoring it. Unless we break lower, you got to like it. So this is trade number 1 that's been working for us, and that has been doing exactly what we expected to. The next one is one that all of you guys have heard of, Tesla. And unfortunately, when we first started doing these stock picks, the very first call we made was that if Tesla went above 180. Unfortunately, our updates only go back to the beginning of March, right? So this kind of takes off of Tesla reached our target of 200. Well, that's based on the fact that once we went on 180, we expected to run to 200. So look at the numbers here. The bottom line, you don't have to read them all necessarily, but we expect the stock to go higher and higher. We like 240 as a resistance. We like 270 as a resistance. Well, let's go and look at the next slide. Okay, so you can kind of see how we make the calls. And I want everybody to notice the simplicity too. Okay, I don't have 20 indicators up on my screen. I'm not overwhelming you with what kind of products they do and all that. It's very simple price analysis. You can kind of see, we went above 180 at the end of February, expected to go to 200, cleared that. Once we cleared that 200, that's when we started calling the 240. You can see where we got that number. Once we cleared that 240 in April, we were expecting 270. Sure enough, right on the nose, as if it was listening to us. Look what became support a couple weeks ago. The same 240 that we called as resistance. So that's why in one of those updates we said, look, as long as the stock holds 240, in other words, we're climbing one rung up that ladder at a time. We got the 180. We got the 200. We got that 230 we talked about. We cleared the 240. We got the 270. As long as we don't break a rung, we're fine. So speaking of rungs, let's look at the last one. Cummins Inc. This was one of probably one of the most popular ones, just because obviously it's a little lower price than the other two. A lot of our options students and members really love it, but same idea. But again, what this leaves out is that the first call, we first went bullish on CMI when it broke above 100. So this is picking up as we broke above 100. We talked about 105, and then once we got above 105, we expect to hold 105. We were hitting this 110, 111 resistance. If we cleared that, we're looking to run to 115. Once we cleared that, a break above 115 should get us to 120. Okay, so these numbers in mind, let's look at the final slide here. And you're going to see, again, I want everybody able to look back and imagine where we were at the time. Imagine you were me at the time towards the end of February. I've already seen this stock hit 100 as a resistance 4 different times. Okay, so when I see it break through, yes, I'm going to call for it to go higher. I expect it to run to 105. Why? I see 105 support back there in October, a little 105 resistance at the end of November or beginning of November. I'm thinking 105 makes sense. Hit it right on the nose, came right back down, hit 100 as support, which is the expectation, pushed above 105, so that's why we made the call to go higher. Look at how 105 became support and then support again. And then you'll notice, obviously, here recently we cleared the 110, 111. We expect to get to 115 and then maybe 120. Didn't quite get to 120 yet, but we don't think the run's over. It's holding the 115 we cited, and now we have a clearly defined up channel as well. So again, we're going to ride this gravy train just like Amazon and Tesla. Unless they break one of those rungs, the trend is up, the technicals are up, and they're looking good. And this is how, to be quite honest with you, when I was asked to pick 3, I'm like, well, of the dozen that I got listed there, only one went against us, and that was Apple. Everything else is just working well for us. But that kind of goes back to, of course, if I think the market's going to go higher, I'm going to lean on stocks going higher. But these stocks were breaking higher, from way back in February. So the market has been working with what the stocks, market stocks, right? So that's kind of the work we do, and subscribe to the keep it simple approach, and don't try to reinvent the wheel, and let price just lead you, and let profits run. Keep losses small.
Awesome. That's great work, Christian. And if you don't mind, just stick around for the Q&A, please. But that was great. Really, what we wanted to do was give you all a glimpse into what we do every week and what's really been working for us. And sometimes it's better to show you, and easier just to show you than explain it. And what I liked about this was I think it really stuck to what was described in terms of exactly what we said we were going to talk about. We did. Now let me just take you through a couple more things. One of the things, we put together like a super special, ridiculous deal for this crowd tonight. Like literally, before I even tell you what this all is, usually say the price of them, just so nobody goes anywhere and thinks this is like a hard pitch. What I'm about to show you, we're offering everything for $27 a month, and it comes with a 90-day money-back guarantee. So this is really just to create a relationship with you and show you that we do good work and can be someone else you can rely on as a go-to source for financial information. So one of the things we're offering is the Daily Trader's Edge. And it's curated content. Myself, Christian, a couple other people put together the breaking financial stories every day, the market-moving stories. And we send this out every day. So you see articles like why hedge funds are about to get wiped out, the only way to avoid a recession, Apple hints at big acquisition to cure growth ills. And we cover 4 specific sectors: the markets and economy, politics, gold and commodities, and technology. And our open rate on this, which is the number of people who take this information open, is the highest on anything I've ever seen. So clearly it's what people want to be reading. In addition to that, and this is based on something that I wanted done, and usually if I want it, I'm an active trader, other people want it, we put together our trade projections, which is a running hot list of 25 stocks we're watching at all times. And what Christian does is he updates it every week, and here you see Amazon with support and resistance levels, and those green red arrows are whether the stock is trending well or down. And this was prior to Apple's earnings. Apple got a big red arrow, and you saw today that it was down significantly. Gilead has been a green arrow since it got above 90. So even though we're still maintaining guidance on it, this literally, and now we call resistance at 102, and it came back off of that. But literally this was 12 points of up from the 90 level that he recommended. FedEx was a good trade. So just really, the IBB was a green arrow at 270, went to 289. So just you could check in on this hot list every week, and it's just kind of like having your homework done for you, and just really good to check in with and be a second source of information. In addition to all of this, what Christian does is he does his market cast calls every Monday and Friday where he breaks down the market and talks about the directions they're heading, and those are recorded if you can't listen to it. And some of the recent trades we made, because with that, you get exposure to all the different things we're working on together. And him and I are literally on text or on a call or doing something every day of the week regarding trading, except the weekends. No homework on the weekends. So this was a trade we did. He came out with 417 analysis on rice on April 17th. And he said, like most energy stocks, it's been a rough previous year for rice coming to 2016. However, the past 2 months have been much kinder. The stock has risen by 100%. If the stock continues to pull back, the 15 level should provide support and our long entry. And this was also based on institutional flow. So on April 17th, trading around $15. And if you look at what happened next, this is as of today. It was up another 2.76% today at 17.47. So those kind of ideas, that might be a stock that wasn't on your radar, but to be able to get this on April 17th and within a week, make $2 on a $15 stock, I mean, that's 13% as a stock trade, pretty good. Another one he just did even more recently was the one he mentioned, SWN. He said after its persistent down, this was on April 24th, so this is like literally a couple days ago. After its persistent downtrend finally hit bottom in December, SWN started forming its basing pattern. Then earlier this month, the stock broke out of its base when it moved above 10. SWN made a strong move on Friday, and we think that move means higher prices are coming. And with that, $12 should act as support. And if you look at SWN today, it was up almost 5.5% at 1370 within a couple days. So those are, again, plus 10% moves, 2 in the last 2 weeks. These are the kind of things that we want you to have exposure to with us. So the way you could take advantage now, you could get access to our Guru portfolio, which is 25 stocks updated weekly with interweek momentum arrows, near-term support levels identified, and imminent resistance levels highlighted. Live webinars, Monday and Friday outlooks. Christian, what time are those done?
9 a.m. Eastern.
9 a.m. So prior to the market open, every Monday and Friday, you can get an outlook for the market. And what that does, it's going to give you points to look for in terms of long and short and key levels to watch during the week. They're all recorded and available for replay. Forecast of stocks that show promise as profit candidates, as well as commentary and analysis on stocks we're ready to trade or are already trading. And you can listen in on Q&A sessions, issues, answers, discussions too. You also get the free subscription to the Daily Trader's Edge, best stock market strategies around with tons of news and information. So a lot of stuff we're giving to you, really just trying to create a relationship with you and kind of get in your good graces. And that offer is available at adammesh.com/Hubert. And we'll chat that out right now. And what you'll see is it's $27 a month. You can cancel at any point. You can get a full refund within the first 90 days. We've only done that one other time in our history. Clearly, we're thinking you're going to like it and use it early and often. So this is just a great way for us to get to know each other better, for you get to see the kind of information we provide. And I think it's a very good price. And that 90 days is plenty of time to get to know us. And start every Monday, start and begin every week with Christian. And I do it. You'll learn to rely on it. It will become a big part of your trading, and it will just help you make decisions and you'll learn a tremendous amount because he's the highest level of technical training there is. So adamesh.com/Hubert. My advice is take this offer, don't look back. We've never done anything like this. In the past, to get into our programs, it was $5,100 to become a member in our community. This is something new. We literally just started trying in the last 60 days as a way pretty much to say, hey, we do good work. Come get to know us. We'll give you great information so that we become a source you rely on. So adamesh.com/Hubert is where you should go now to order that. It's only available through this webinar. It's obviously a special link we created just for tonight. So if you did want to check it out, $27. It's you have 90 days to make sure you're happy with it. Q&A. Any questions? Obviously, if anyone needs to call in for anything, it's 212-774-5983. Any questions on the presentation you saw tonight? Did you guys appreciate that? Was it as described? We just want to make sure we did a good job. Everybody's still here. Nobody's really left the presentation, so shows you guys are involved. So any questions you have now, or if you're busy ordering, as you should be for the $27, then I can wait. I think everyone's busy ordering right now. That was a good job, Christian, though. And, yeah, we're excited. Like, that call, since we started, literally we started a couple months ago, and there's already, like, a nice-sized group coming on and participating, talking about different trades every Monday, Friday. And, again, it's recorded and sent out afterwards. David said, good job. Thank you. Yeah, come on in, sign up, David. And Christian, you think we're still going higher, huh? Up is the word. Facebook certainly,
as of right now, yeah.
Facebook certainly helped accelerate that, right?
Yeah, I mean, right now everybody's playing. I mean, well, most stocks are playing well, and a lot of the big names, a lot of those. I mean, I think Netflix was the one of the bigger names you and I had talked about that wasn't, doing well. But Microsoft, obviously, we talked about that, hanging out, close to highs, maybe even considering moving higher. I know their earnings was a disappointment, but yeah, as of right now, I mean, I know it's hard for everybody because we had a rough start to the year, and obviously last August, September gave everybody the chills. So it's hard to kind of, shake off that bearishness. But right now, as I keep saying, as you hear me say every day, until the market tells me, otherwise, the expectation is up, And so that's the way we've been trading, and it's been working really well for us.
It is really interesting how big name stocks don't move the markets like they used to. Like I still remember, you go back a long ways, like to 2000, but I remember when Intel pre-announced earnings that they were going to miss earnings for the first time. The futures fell off, so the market was indicated to open down like 500 points. Now you see Apple get clobbered, Twitter get clobbered, Google, Microsoft, and it doesn't matter. The NASDAQ was down a little bit, but the markets are it's just crazy how individual stocks don't mean much to this market, and they're not going to move the markets that much.
Yeah, I think that, and that's one of the things that I've been working with a lot of our students, and because, of course, those trade projections are doing very, very well. Those of you that are jumping on board, you're going to be able to see that yourself, and you can go back every one of those reports and see for yourself that, we've been really knocking the cover off the ball. And in all fairness, that pendulum will swing back the other way. But one of the things that, people on the calls that come in those Monday and Friday calls, which seems to be what everybody likes the most, because, they're live and they can ask questions and such, is, I don't seem to be able to get that success with my stocks and those kind of things. And I try to remind them that, look, each one of those stocks that are in those trade projections, we're not just picking a household name or, like you said, the big dogs, things like that. What we're trying to do, or what I'm trying to do, is I'm trying to seek out stocks, CMI and Amazon, all those key levels I highlighted. Well, the stocks were picked because of those. So what I'm doing for everybody is I'm going out, I'm researching the stocks, I'm finding the ones that simply, for lack of a better phrase, show us how to trade them. And that might not be your Apple, you know. That might not be somebody says, hey, what do you think about this stock here? Where's the level there? Well, I don't know that there is one, but how about let's go look at this one, right? So, and that's what I encourage everybody on this call to do, you know, you can trade with a simple approach if you find stocks that set you up to do so, you know, and that's what we try to do.
Hey, Christian, I have a couple people asking for a gold breakdown. Like real quick, we don't have to spend a lot of time on it, but I'm going to give you control of the screen, and maybe you could do a quick breakdown on gold. Is that all right?
Oh, sure.
All right. I'll give you a second to get your screen up. I'll give people more time to use this link to sign up. The stock to avoid was Chipotle. A couple of people asked. Yeah, Mike, it's something new unless you have the group calls, and then I think you should be good. You could probably just email Stephanie, Mike, and get it because you're in a bunch of stuff. Okay, what else? Yeah, a couple of people asking about gold. Microsoft, John, we'll see what happens at 50. Obviously, it's still recovering after earnings. You want to give it a little time to settle and then see where it settles. We're just going to do a quick breakdown on gold, and then we're going to wrap it up. But make sure you guys go to adamus.com/Hubert to take advantage of this special promo. Again, we've never done anything like this before. You should definitely check it out. Okay. All right. Did we give Christian the screen? Yeah. Okay. Here you go, Christian.
All right. I just went ahead and pulled up stock charts since I didn't have my my software open here, so I figured I'd just show everybody here. But here's kind of what gold has done. And, you know, again, everything for me, whether it be oil, sometimes certain things are easy to break down than others at certain times. So one of the things we were able to call was we figured the low in gold would be around 1,000 to 1,050. If you want to see why, feel free to go back and look at, you know, your 2008 breakout, 2008-9 breakout, and there was a pretty good resistance there. So coming off this was pretty straightforward, but gotten into an area where it's a little bit murkier. But what I would say is if everyone just kind of looks, you know, kind of a, you know, this kind of like this lower high, and then higher low, gold looks like it's consolidating in preparation for a pop higher. I mean, that's what it looks like. If that ends up being the case, I would think gold at least runs to, say, 1350, 1400 area. But if gold were to break down below 1200-ish instead, then, you know, at that point it becomes a little bit murkier of a picture. But right now what this looks like is we shot up nicely. We're consolidating back and forth in preparation for a move higher. And so all signs, I mean, there's nothing really, and Adam, you and I talked about this a couple of weeks ago. Do I see anything that excites me? Not necessarily, but all the signs seem to be a bullish nature right now. Thanks, Christian.
And Ron said, can you show something on the right edge of the market today and what you discussed on your Monday and Wednesday? So there's an example right there, Ron. And the recap of the offer was, Ron asked for the recap of the offer. Am I showing my screen right now, or Christian showing it? Okay, I'll just read it. You get Christian's hot list of 25 stocks, which he identifies which are hot, which are cold, support and resistance levels every week, access to his Monday, Friday market breakdowns, and a free subscription to Daily Trader's Edge for $27 a month. And it comes with a 90-day money-back guarantee. So if anyone's interested in trading and learning and getting educated, really kind of a no-brainer, you know, to learn. Is it $27 per month try-up period only 3 months? What is the price after 3 months? Steve, it's $27 per month for as long as you stay on. Sorry if I wasn't clear. $27 a month. So if you stayed the whole year, it would be 27 times 12 would be $324 for the whole year. So yeah, there's no upsell after that. Just 27. Did I make it sound like it's 27 and then it goes up? Nope, 27 a month. I'm not used to talking about a price that low. And I can address Ron's question here as far as wondering what's discussed on the and
and it's Monday and Friday, by the way, not Monday and Wednesday. But basically what I'm doing in those calls, everybody, is I'm updating the market first off, all right, because I know a lot of you are doing your own trading, and so I'm going to update the market just like you saw me do. Even though I went through it very quickly, keep in mind, everyone, that the people that are on those calls are hearing me talk about it every Monday, every Friday, every Monday, every Friday. And so they kind of know. They kind of know the roadmap, and they kind of know all this stuff I just went through, with all of you. So the first thing we do is talk about the market. We might kick around whatever's in the news. But most importantly, I spend the majority of the call talking about a lot of those trade projections, because a lot of people on the calls are in those. So I'm helping them update them. I'm answering stop-loss questions. And then I throw out any new stocks I see, that might be interesting. For example, just to give you an example, just this week, I threw in a new one for everybody, and it wasn't, it's not in the trade projections. It was just right there on the call. I said, on Friday and Monday, right here, Charter Communications. Okay, everybody can see this 195 resistance. And obviously pop through. And then last week, at the end of the week, I said, if this thing comes down to 195, you got to buy it there. And then we said the same thing on this Monday. Hey, if it comes down to 195, you got to buy it there. If not, buy it when it pushes through 200, right? So this is the kind of thing, and you're going to see my screen. So I'm showing this to everyone. And so when Adam talks about $27 being nothing, I mean, if you bought that stock, 100 shares, 50 shares, you just paid for how many months? If you bought a call, if you're an options trader, those are the things I try to put out there, so it's somewhat of a no-brainer, like Adam said. But these are the things being discussed, Ron.
And last question was someone was asking about where we see resistance on oil.
Well, when I just updated oil, I know my most recent update on oil was if it broke through 42.50, it should go higher. So there you go. We went up 42.50, bounced on it. Here we go higher. I wouldn't think we run into resistance probably. Oil's looking very good. A couple other bullish things that I've seen. So we started calling this for go higher once it hit 35. When it came back down here, broke above the 35 level. Right now, I would think that oil is heading back to 50 at least. And you just kind of got to take it from there.
And then, Chris, DG, you said, do you have a feeling on whether the markets will retain upward momentum for the year? The nice thing about Christian is we go week to week because there's no point in trying to predict for the year. It's a losing game when you could. It's a losing game when you could rather just go slow and analyze on a week-to-week basis and with the markets. That is the key to successful trading. It's not predicting the markets. It's reacting quickly to what they're doing. So many people try to predict what's going to happen, but the key to success is always going to be reacting quickly to what they're doing. Wendy said, what's your view on the biotech companies like BIIB, Celgene, REGN, Guild? Like BIIB had good news a week ago, went up and then died off. I'm very bearish on biotechs, although the market is hard to be bearish on right now, but I am, especially because of the elections. There's a high likelihood that Hillary Clinton is the next president, and she has said in a bold statements that she's going after the pharmaceuticals and biotech companies and their pricing models. So I think there has to be limited upside on the biotechs despite what they've done. But the nice thing is that's what makes a market, because Christian will certainly tell you until we go below 270, he thinks biotechs are heading higher. So you'll find that Christian and I are not always in sync. We battle on some of the calls. I'm more bearish than he is. He's more bullish. But again, that's what makes a market, and I think what's really helped our audience is having multiple perspectives, and then at the end of the day, when we ever do agree on something, that's significant because there's a lot of times we're on different pages. So I hope that helps. Vin said, you narrow your picks to the best two, depending on the service, Thanks, Karen. Welcome aboard. Happy to have you. Wendy, hope that answered your question. Go ahead.
When Vin asked about narrowing the picks to the best two, those trade projections, there's always, you can kind of see there was a dozen just on that list that Adam showed. And then on Mondays and Fridays, generally I'm throwing in like 1, 2, 3, whatever I see. It is a matter of the stocks giving me it's kind of like being at the plate. You know, I'm waiting for my pitch, and so I need these stocks to give it to me. So I didn't talk about Charter back through this period of time, end of March and April. I talked about it this week because it was approaching a level where there was a trade available. So on those calls, if I see on top of the trade projections, I always like to update those, or a few of them anyway. On top of that, if I see something like Charter that looks just too good to pass up, you know, then of course I throw it out there. Or when Disney, I mean, I threw that in the trade projections. When that thing broke above 100, you know, we targeted 105. That's where it's at. So it's a lot of stocks there for you guys. You can pick and choose. Some of them are $10. MRO was $14. Adam showed you a couple. Some are in the multi-hundreds because we want to spread it around for stock and options traders.
Awesome. All right, so go to adammesh.com/Hubert, and you'll have this kind of action every Monday and Friday. We want new members. We want new energy. Steve just signed up too. A bunch of you signing up now. Yeah, I really think it really is. For people who like the markets and want to talk about trading, it's just an amazing, amazing vehicle. Just so you know, I based it literally on how much I pay for a fantasy football site for the year. And I was like, if I do this for fantasy football to see who the hottest players are each week, how would people not want to do this for the market? Because there's so much more money to be made in the market. So we did it as a cool thing. It's fun. I see a bunch of more people just jumped on, so maybe you guys are waiting to the end. So we welcome all of you. And again, it's adammesh.com/Hubert. I'll send it out one more time to everyone, only because I think it's like we did it at this price so you can feel comfortable moving forward with us, and we look forward to working with you. So go to adammesh.com/Hubert. If you don't feel comfortable with the link and you want to call up, the phone number is 212-774-5983. Christian, thanks for working late tonight. I appreciate you. Everyone else, thanks for being here. We appreciate you. Hubert, thank you so much for hosting this. I appreciate you trusting me with your audience. I don't take that responsibility lightly. And that's it, everyone. Have a good night.